welcome back to my channel. So this is a part 2 of our lesson 3 in Treasury Management. So again, our topic for today is about financing short-term cash requirements. If you can still remember, if you can view on our lesson in banking and financial institutions, we already discussed about financing. Ayun. So and then we also tackled about external and internal financing, di ba? So, yun. So, although medyo, ano lang siya, parang sort of review, but financing short-term cash requirements na i-discuss natin ngayon is about, or more on external financing, di ba? If you will think about it, di ba, minsan parang how do firms raise the funding that they need? Most of the time, they borrow money through debts. They sell ownership shares. Ito yung internal financing, which is mag-initial public offering sila ng stocks. Ayan. Or dadagdagan nila yung equity nila and retain the earnings or through their profits. Now, si financial manager or si treasury manager must assess all these sources and choose the one most likely to help maximize the firm's value. So like expenses, syempre, if you're going to think about borrowed funds, it can be divided into short-term and long-term loans. See, short-term loans, ang short-term loan comes due within 1 year. Si long-term loan naman, yung maturity niya greater than 1 year. Si short-term financing naman, when we say short-term financing, it is shown as a current liability on the balance sheet. If you can remember balance sheet, so why? It is used to finance current assets and support operations. So, di mo balance siya dapat. So, nasa current assets siya and current liabilities. So, mag-finance siya ng current assets. Now, short-term loans can be unsecured or secured. Later, we will discuss what is the difference of the unsecured and secured. Now, let's discuss different financing short-term or different unsecured short-term loans muna. Ano ito, ma'am? When we say unsecured, di ba parang di ba mababayaran daw ganyan? Kasi unsecured. These are made on the basis of the firm's credit worthiness and the lender's previous experience with the firm. The unsecured borrower doesn't have to pledge specific assets as security. Imagine, may nagpapautang pala ng gano'n. Yes, lalo na kung suki ka naman nila, o kaya naman nakapag-loan ka na sa kanila dati, pero nabayaran mo. Kumbaga parang good payer ka naman. So yun, so may mga ganun talaga ng mga institutions. The three types of, or main types ng unsecured short-term loans are trade credit, bank loans, and commercial paper. So, ayan, narinig na rin natin yung commercial paper, diba? So, let's discuss each of this. See, trade credit. And the seller extends credit to the buyer between the time the buyer receives the goods or services and when it pays for them. Si trade credit, for example, si Goodyear, so yung nagmamanufacture ng gulong. So, nagbebenta siya ng tires kay General Motors, kay Ford, or kung kahit kanino man ng mga car companies. Now, ano ba, General Motors or si GM? Si GM doesn't have to pay cash on delivery. Sa dami ng ino-order niya na tires, tsaka kumbaga parang suki naman na, di ba? And si Goodyear, alam niya naman yung credit worthiness ng GM. Instead, si Goodyear, binibuild niya lang si GM for its tire purchases, tapos si GM will pay it at a later date. This is an example of a trade credit. I-extend the credit ni seller ang credit to the buyer. So, kumbaga parang hindi mo siya agad-agad babayaran. Ma-extend mo yung payment mo of your liabilities. If you can still remember in the lesson 2, trade credit is a major source of short-term business financing. So, ito ano siya parang minsan nga hindi na technically sasabihin ng supplier na, mag-trade credit na lang tayo. Hindi na gano'n. Kumbaga parang nasa internal arrangement yun na. And then, parang you will just realize that this is the trade credit. The trade credit yung tawag doon. So, the buyer enters the credit on its books as account payable. Ayan. Yun yung si account payable. Yung mga accounts payable under niyan, number 1 are your trade credits. So in effect, the credit is a short-term loan from the seller to the buyer of the goods and services. Until the car company pays Goodyear, Goodyear has an accounts receivable from that car company. And ngayon naman, si car company has an accounts payable to Goodyear. So that is an example of a trade credit. Minsan nga hindi na yan ano ba si Goodyear talagang ano niya yon para syempre medyo sa kanya talaga kumuha ng gulong yung mga car companies. Minsan nga hindi na yan yung lalagyan ng, di ba pag umutang ka, meron pang um, interest, ganun. Minsan nga hindi na eh. Or they will, kung gusto nilang mas speed up yung collection ng receivables nila, again, in our past lessons, pwede silang ano sa ng discount. So kapag nagbayad po kayo within 1 month, may ganito po kayong discount. So, yun. So, but again, kapag hindi mo binayaran, hindi siya cash on delivery, nagbayad ka pa at a later date. Ang tawag doon, trade credit. And this is the number one na nagiging financing or short-term business finance. Next is, okay, that's the trade credit. Number two is bank loans. Ayan. So, ito, companies often use these loans to finance seasonal or cyclical businesses. Unsecured bank loans includes lines of credit and revolving credit agreements. Later, we will discuss that. So, again, di ba, as tayo din naman, di ba, sa mga, tayo, kahit mga personal tayo ng mga tao, we often opt to do bank loans, especially sa kotse at sa bahay. Yun naman yung mga, um, kumbaga parang business loan din pala pwede sa mga bangko. So yun. But again, ang dami na rin kasi financing company. So pwede ka rin mag-business loan sa mga lending companies. Ganun. But yung mga major natin is the car and the house. So yun. So, ganun din yung mga companies. Especially, halimbawa, etong SM. Halimbawa si SM muna. Dahil sobrang laking company na niya. So, kumbaga kampante na si BPO at isa lang naman yung owner. So, mag-sister company naman sila. Pero kahit naman, halimbawa si BPO, magle-lend siya to other companies na malalaki. Like, for example, halimbawa si McDo, si Jollibee, halimbawa lang. So, pwede sila mag-lend. Kasi alam nila, hindi naman magsasara agad yung, ano na to, yung company na to. Kahit na wala ng collateral. Kasi alam nila, makakabayad naman talaga. So, yun. So, those are bank loans. Okay, so again, it evolves. Ayan, unsecured bank loans, it includes lines of credit and revolving credit agreements. What is lines of credit? It specifies the maximum amount of unsecured short-term borrowing the bank will allow the firm over a given period, typically 1 year. So, si line of credit, kumbaga parang kang, um, what do you call that? Meron kang credibility, meron ka ng tataas yung credit wallet niya sa kanila. So, yun. So, kaya di ba nakabayad ka? So, nag-loan ka, tapos nakabayad ka. So, in the next year, minsan nga sila pa yung makungulit sa'yo na baka gusto niyo po ulit mag-file ng business loan, ganyan. So, yun. So, that is line of credit. There is just this maximum amount na pwede mong hiramin sa kanila. And then they will just give you, as a business, they will give you over a given period. Dahil nga short term lang ito, typically 1 year or less lang yung pagbabayad mo in lines of credit. Again, this is unsecured. You don't have to have your collateral para dito. So, syempre, ano naman, understandable naman if you will just be given a maximum amount of what you need or what you are um, to borrow from them. And so that's line of credit. Number two is revolving credit agreement. So what are these? It is a guaranteed line of credit that carries an extra fee in addition to interest, often arranged for a period of 2 to 5 years. See, kung sa lines of credit, typically 1 year lang. The revolving credit agreements naman, depende na yan, di ba, sa sa agreement niyo with the company. The firm either pays a fee, meron siyang babayaran additional fee bukod sa interest ha. Sa lines of credit may interest yan syempre. So yun, so si revolving credit agreement may interest ka na and magbabayad ka pa ng additional fee. Yan. Why? Kasi, halimbawa kung kailangan mo talaga in 2 to 5 years yung pera na yun. Si lines of credit kaya din wala siya kasi mabilis mo lang siya dapat nabayaran. So yun. So, you can choose between the two. You can either pay a fee or keep a certain percentage of the loan amount in the checking account at your bank. Pwede kang bayaran mo yung fee na yun or kung you are required to have a checking account dun sa banko na yun, kailangan may pera ka na 10 to 20% or certain percentage ng niloan mo. For example, nag-loan kang 1 million, dapat meron kang 100,000 dun sa checking account mo. Hindi mo gagalawin yun hanggat hindi ka nakakabayad. So that is revolving credit agreements. So, ginagawa yun ng bangko, syempre, para medyo kampante sila that you can pay for them no matter how long or no matter how medyo tumatagilid na yung company. So, yun. So, that's lines of credit and revolving credit agreements. Now, okay, let's discuss commercial paper. Ayan. Ito, medyo kanina pa natin narinig ito eh. So, si commercial paper, it is a short-term money market. Again, money market din siya. Money market instrument that ang maturity period niya is 270 days. So imagine, less than a year lang siya. Ini-issue siya ng big corporations for meeting short-term liabilities. Etong short-term liabilities na to, madalas yung mga pampasweldo, ganyan. So, kapag kulang sila ng pampasweldo, pwede nga sila, di ba, mag-issue ng shares or pwede silang maglabas ng commercial paper. Ano yan? Si commercial paper, so parang pag binili mo yun, di ba? So, syempre, magkakapera na yung company, makakapagpasweldo na sila. Pero doon nakalagay, kung paper lang siya talaga na may interest rate. So, sa tubo yung pera mo, papautangin mo sila, parang gano'n. Fix yung interest rate, but again, it's unsecured. So, walang ibibigay sa'yo na collateral yung isang negosyo. It is used to meet short-term liabilities, and this is for the United States. Ayan, so the lot size is generally dapat $100,000. Interest and principal payment on maturity, convenient and inexpensive financing option, and higher interest rate than guaranteed instruments. So, these are types of commercial papers. Pwedeng mag-issue ng promissory note. Ayan, si company. Ang maker nito is kumbaga parang they will just write the promissory note that they will promise you to pay this holder or to pay the one who will buy that promissory note. Si draft naman, si drawer issues order to pay and drawee is a party to whom order to pay is given. So, yun. So, kumbaga ako si drawer ng draft. So, kumbaga parang I will issue a paper that you're going to pay for me ganitong amount at this time. Ganun. Syempre, based on our agreement. Next is check. A check is also a form of commercial paper that is drawn on a bank. So, bibigyan ka naman ng check eh. And CD, acceptance by bank of acquisition of specific sum from depositor for specific time. So, kapag nag-issue sila ng CD, it will kumbaga parang ikaw as someone na bumili noon is you will acquire something sa bank sa account nila and then at this particular time. Ganun siya. So that is commercial paper. Many big companies use commercial paper instead of short-term bank loans. Why? Kasi ang interest rate ng commercial paper is usually 1 to 3% below bank rates. So, kesa nga naman mag-loan sila sa bangko, kung maliit ang interest natin sa bangko, sobrang laki naman ng interest nila sa mga umuutang sa kanila. So, yun. So, usually, ang mga commercial paper, ang interest lang niya is usually below 1 to 3%. Kung halimbawa, 5% pero mababa pa yun. Halimbawa na lang, 5% ang interest ng bangko, sa commercial paper, mga 1 lang, 2% lang. Sobrang baba niya lang din talaga. So, yun. So, why does people buy commercial paper, di ba? Kasi, kumbaga parang this is sure eh. Kasi, the maturity, and short term lang, di ba? So, the maturity period is just below 1 year. So, medyo liquid pa yung pera mo nun. And you will get money. You will surely get the money, lalo na kung blue chip yung company na pagbibili. So, those are commercial papers. The second one, ayan, syempre we have unsecured short-term loans. We also have secured. Okay, ano namang meaning niya, ma'am? So, syempre po sa unsecured, wala ka nang kailangan na i-collateral dyan dahil maganda naman ang credibility mo and yung credit worthiness mo in that bank or in that company. To secure it naman, you are required, okay, it requires the borrower to pledge specific assets as collateral or security. The secured lender can legally take the collateral if the borrower doesn't repay the loan. Ito yung mga typical na mga bank loans na merong collateral. Pwedeng ang collateral is sa personal, pwedeng ang collateral is yung bahay mo, sa friend mo, hatakin nila yan. Or sa business, pwedeng ang collateral nila is your accounts receivable, your inventory, ayan. Why? Yung mga accounts receivable kasi they are normally quite liquid or pwede mo siyang ma-convert agad sa cash. They are an attractive form of collateral. Dahil doon, so, kumbaga parang ang ganda niya rin na gawin ng collateral kung marami kang stocks. The appeal of inventory or raw materials or finished goods as collateral depends on how easily it can be sold at a fair price. For example, kung ang inventory mo is rice, ayan. So, siguro medyo attractive yan sa mga um, banks kasi madali lang naman din talaga siyang mabenta. Pero kung yung collateral mo or yung accounts receivable or inventory mo or medyo mahirap siyang ibenta. So yun, so minsan hindi yan tinatanggap din ng bangko as your collateral for that particular loan. Like, kukunin mo. So yun. So again, we're done with our discussion. For this video, we discussed financing short-term requirements through unsecured. Again, unsecured, you don't have um, to have a collateral. You just need your credit worthiness and yung, kumbaga parang uh, past record mo sa kanila that you are a good payer. Kaya sila pumapayag sa unsecured. But, syempre, dahil unsecured nga ito, kumbaga shorter yung span. Whereas, the next one is the secured short-term loans or you should have your collateral para mag, um, ma, makapag-file ng loan. And si lender can really take the collateral na sinabi mo or nilagay mo sa paper, sa kontrata nyo, if hindi mo sila nabayaran sa loan. Okay, so we're done with our discussion for today about the liquidity management. So again, these yung mga strategies na sinabi ko kanina, the short-term, mid-term, and the long-term investment strategies. Those are the strategies that the companies are taking para ma-manage ng maayos yung liquidity ng company. So thank you so much for listening. I hope you learned a lot in this lesson. And if you have learned a lot, you can type it down on the comment section. Just express what you have learned. Just tell us. And if you have your requested topics, ayan, pwede ka rin mag-request on the comment section. Thank you so much. I hope to see you again on the next lessons pa. Bye and God bless.